Hold on. Before signing up for zero down solar, you have to know this. The lower the interest rate does not always mean the lower the cost. But how can that be? We'll talk about this and more in this video. Hi, I'm Tom with Premier Roof Solar. I've been helping homeowners save money on their power bills for the last 5 years with renewable energy. My goal is to educate and empower homeowners like you so that you can make the best decision for your unique situation. Before getting into the nitty-gritty of solar loans, which is something most solar reps don't like to get into, I want to make sure to differentiate a few things when it comes to zero down solar. Basically, there are two ways to do it. Number one, finance the project through a loan, or number two, do one of many different types of solar leases. Both cost you no money out of pocket and can save you money as soon as the system's active. The way that works is essentially a bill swap. Instead of paying a higher power bill, you're paying a lower solar bill. The biggest difference is going to be that with one option, you own the system and the other you don't. But more on that later, so make sure you watch the whole video. When financing the project, there are a number of key differences that you need to be aware of so you don't get any surprises and so that you can make the best informed decision. Let's start with the tax credit. That's right, it's a tax credit, not a tax rebate, which is what most door-to-door sellers and a lot of the online ads will tell you it is. So what does the credit mean exactly? I'll give you 4 examples. Now, I'm no tax expert, so these examples I'm about to give you are oversimplified, and it's just meant to give you the gist of how this works. All right. Let's start with a W-2 employee, as most people are. If you're W-2, then you're going to have some money that's withheld from your income every paycheck that goes towards the taxes that you owe when you file for them the following year. Let's say they withheld $17,000 and you owed $15,000 in federal taxes. That means they over-withheld by $2,000 and you would get that back with your income tax return. Now, if you had solar with the same example and they withheld $17,000, you owed $15,000, but you have a $10,000 tax credit, you'll get $10,000 plus the $2,000, so you'll get $12,000 back on your tax return, which is why so many people call it a rebate. But it's not that, and there are way more scenarios than just a simple W-2. So let's say that you're a W-2 employee, but you want to exempt some months, or you don't have very many deductions, so they under-withheld. So let's say they only withheld $12,000 and you owed the $15,000. That would mean that you owe $3,000 to the federal government. But if you have solar, using the same example of a $10,000 tax credit, you would then only owe $5,000. And if they withheld the $12,000, then you would actually get $7,000 back on your tax return. Now let's say you're exempt, 1099, self-employed, or something along those lines. If you're in that scenario, then you're pretty much not withholding anything automatically. So with no money withheld, if you owed $15,000 in taxes and you had a $10,000 tax credit, then you only owe $5,000 to the federal government. That other $10,000 that you normally would have owed to the federal government are yours, and you can do whatever you want with them. So when you hear ads that say the federal government's paying for solar, this is what they mean. So one more example. Let's say, again, you're exempt, 1099, self-employed, or something like that. Or you just report really low income and nothing is being withheld. So let's say the tax burden is only $7,000 and you have a $10,000 tax credit. The tax credit is going to erase the $7,000 and then that $3,000 that's left over will carry over to the following year. My understanding is that it will roll over for up to 5 years or until you take advantage of all of it, whichever one happens first. So what do you do with this tax credit or this money that the government's giving you? What most people do is they put it into the loan. Let me show you what I mean. So with this example, the system costs $30,000. 30% tax credit is $9,000, making the net system cost $21,000. The loan payments start at $261. This is based off of this $21,000. Everyone qualifies for the tax credit. There's no age limit or maximum income. It's just a matter of not reporting too little income, like in the example I just gave you. So unlike other loans, all the solar loans will start you on this lower monthly payment and give you 18 months to put in the 30% and keep that monthly payment. So let's take a closer look here at the small print. If no voluntary payment is made, the remaining months 19 through 120, which is in this example, payments will be $378.91. The payments go up to $378 because they are then based off of the $30,000 rather than the $21,000. At the end of the day, in the example we just looked at, that $9,000 is extra money that you're not getting in any other way. This is what they mean when they say the federal government's paying for your solar. They're talking about this tax credit. because it's money that you no longer owe the government. And so you're getting it back as a bigger income tax return, or it's just less money that you owe to them. And then you can use that money to pay down the solar. You can look at it as a discount or as a down payment, or you can just use it for something else. It's totally up to you. And it's a bonus and incentive that the government is handing out at the moment. That way, you're not paying any money out of pocket. Which brings me to my next point, the benefits of doing a solar loan. Number one, you own the system, and you can do so without paying any money out of pocket, because you're getting this down payment from the government to get you a lower monthly payment. And then instead of paying the power company, you're paying off the solar loan. No matter what, you're always going to have to pay for electricity in some way, shape, or form. So with this route, you're not paying anything out of pocket to have a lower monthly bill. And then depending on how long your term is, whenever that ends, you're going to own the system free and clear. And it's an added value to your home. Comparing loans to other month-to-month plans, you also have the flexibility of paying it off early. There's no prepayment penalties, and you're going to be lowering the cost by paying it off early by saving on the interest on the later months. And of course, it's giving you the benefit of saving money as soon as the system's live. Again, no money out of pocket, and you just save money as soon as the system's active and it replaces your utility as your power provider. And it's very easy to transfer if you sell the home. You can either transfer the loan over, or you can pay it off, and since it's an added value to your home, it will increase the value of your home. Now let's take a look at the dealer fees. So what are dealer fees? If you're familiar with the mortgage industry, then this is basically those origination fees or lender fees. So you can get a better idea as to how they affect the cost of solar. Let's give you a couple of examples. All right, so in this example, the system costs $27,585. It has a 15-year term at 2.99% interest with a monthly payment of $136. Not too bad. Now, if we look at a higher interest rate, yes, the monthly is higher at $151, but if you look at the loan amount, it's $7,000 less. The other one was $27,000. This one is $20,000. So it really comes down to what it is that you're trying to do and what your plans are. If you have absolutely no plan to pay it off soon, then I would go with something that has a very low interest rate and a very long term. Something like this. You can see this is only $118 a month. To give you a little bit more detail, let me show you exactly how these dealer fees work. So going back to the first example of 2.99% or 3%, the dealer fee is about 33%. Now, if we go to, let's say, 25 years at almost 10% interest rate, that sounds like a really high interest rate. The dealer fee is only 5%. So again, it just depends on what it is you're trying to do. If you plan on paying it off soon, it would be better to get something with a higher interest rate. That way they're not front loading the loan or adding to the principal, forcing you to pay that even when you pay it off sooner. If you're not sure of what your plans are, then I would go with something in the middle. Something that doesn't necessarily have the lowest interest rate, but it's going to give you a low monthly payment and not the highest dealer fee out there. So when it comes to dealer fees, just remember that the lower the interest rate is, the higher the dealer fee is going to be. That's not necessarily a bad thing. It all depends on what you're trying to do. If you're thinking that you don't want to deal with dealer fees at all, so you want to pay the system off cash, that will save you the most money overall. But most people don't have $15,000 to $30,000 lying around to pay for solar. So if you're thinking about waiting to save up that money to do solar, that's not necessarily the best option, because you'll be paying the power company in the meantime. That will end up costing you more than what the dealer fees cost. What I would recommend doing is getting it on a loan, getting a higher interest rate and lower dealer fee, and then paying it off as soon as possible. This is the closest thing to paying it off cash that you have if you don't have all the money right now, but you do plan on having the money soon. As you saw in the examples, there's multiple time frames for the term as well. It can go anywhere from 5 years to 25 years. Again, it just all depends on what it is that you're trying to achieve and what's likely to happen in the foreseeable future. Now, comparing it to a lease, it's better because you own it as an asset and you don't have to worry about there being an escalator. It's a fixed monthly cost. It all just depends on how much you put down within those 18 months. Aside from that, it's fixed. And it tends to be a lot less than what you would be paying to the power company, also depending on the length of the term that you choose. I have many clients that choose to go with something that's the same monthly cost as what they pay now, but they pay it off in 10 years or 15 years. Then everything after that is a bunch of extra money that they have in their bank account now. Overall, loans do cost less than leases with an escalator. The only downside is that in most cases, you don't get a production guarantee like you do with a lease. And that goes for any purchase or ownership options. When it comes to selling your home with solar and you have a loan on it, like I mentioned earlier, it's very easy to transfer over to the new homeowner. They typically just need to have a 650 credit score or higher, which if they're buying a home, they more than likely do. Or you can pay it off and it's an added value to the home because most, if not all of the electricity is going to be covered, so they're not going to have an electricity bill. It's technically just going to be part of their mortgage. Last thing to note is that the payments typically start 60 days after the system's installed. There are some lenders that from time to time will have different promotions where you get the first year free. Essentially, you're just starting the payments 1 year later. So for example, if you have a 25-year loan, it's technically going to be 26 years because you didn't pay anything in the first year. Now, if you don't like the idea of getting into debt for solar and you don't have the cash, or you don't like the idea of paying cash either, there are other options. So make sure to check the description below or check the next video. And if you want to know if solar makes sense for you, or if you just want another quote to compare, click the link below to book a call or just check the next video.